Everything you do with money follows rules most people were never taught. From your first paycheck to your daily spending, money operates on a system that's often invisible but always present. In this video, we'll break down the basics of how money actually works so you can make smarter choices and avoid common pitfalls. Let's start by uncovering the hidden rules that shape every financial decision you make, whether you're saving, spending, or investing. Understanding these basics is the first step to taking control of your financial future. Let's start with the most fundamental question. What is money? At its core, money is a tool, a medium of exchange that allows us to trade goods and services efficiently. Instead of bartering, we use money as a common ground. It's also a store of value, meaning you can save it for future use, and a unit of account, which helps us measure and compare the value of things. These three functions, medium of exchange, store of value, and unit of account, are what make money so powerful and essential in our daily lives. Before money existed, people relied on bartering, trading goods and services directly. But bartering had its limits. Imagine trying to trade eggs for shoes when the shoemaker doesn't need eggs. Money solved this problem by acting as a universally accepted medium. Over time, societies used shells, metal coins, and eventually paper bills as money. Today, most money exists digitally, but the basic idea remains the same. Money is a tool that makes trade easier and more efficient. Money is constantly moving between people, businesses, and banks. When you buy something, money flows from you to the seller. When you get paid, it flows from your employer to you. Banks help move money even further, allowing you to deposit, withdraw, and transfer funds. This flow is what keeps the economy running, connecting millions of transactions every day. Understanding how money moves helps you see the bigger picture of your own finances. Earning money is the starting point for most people's financial journey. Whether you have a job, run a business, or freelance, you exchange your time, skills, or products for money. The amount you earn depends on factors like your education, experience, and the demand for your work. But earning is just the beginning. What you do with your money next is just as important. Spending is where most people interact with money daily. Every purchase is a choice, and those choices add up over time. Spending wisely means prioritizing needs over wants, comparing prices, and looking for value. It's easy to fall into the trap of impulse buying, but understanding your spending habits is key to keeping your finances healthy. Saving money is one of the most important habits you can develop. Even small amounts set aside regularly can grow over time. Savings act as a safety net for emergencies and help you reach future goals like buying a home or taking a vacation. The earlier you start saving, the more you benefit from the power of compounding, where your money earns interest and grows on its own. Budgeting is simply planning how you'll use your money. It helps you track income and expenses so you know where your money goes. A good budget ensures you spend less than you earn, save for the future, and avoid unnecessary debt. It's not about restricting yourself, but about making sure your money works for you, not against you. Debt is money you borrow and promise to pay back, usually with interest. Not all debt is bad. Loans for education or a home can be smart investments, but high-interest debt like credit cards can quickly spiral out of control. The key is to borrow wisely, understand the terms, and always have a plan to pay it back. Interest is the cost of borrowing money or the reward for saving it. When you borrow, you pay interest to the lender. When you save or invest, you earn interest. Understanding how interest works is crucial. High interest on debt can cost you a lot, while earning interest on savings helps your money grow. Your credit score is a number that shows how trustworthy you are with borrowed money. Lenders use it to decide if they'll give you a loan and what interest rate you'll get. Paying bills on time, keeping debt low, and using credit responsibly all help build a good score. A higher score means better financial opportunities. Banks are where most people keep their money safe. They offer checking and savings accounts, loans, and other services. Banks also help you manage your money, pay bills, and even earn interest. Choosing the right bank and understanding their fees and services can make a big difference in your financial life. Most money today exists digitally, not as cash. We use debit cards, online banking, and mobile apps to move money instantly. Digital money makes transactions faster and more convenient, but it also means you need to be careful with passwords and security to protect your accounts from fraud. Inflation is when prices rise over time, making your money worth less. Even if you save, inflation can slowly erode your purchasing power. That's why it's important to not just save but also invest so your money grows faster than inflation and keeps its value. Investing means putting your money into things like stocks, bonds, or real estate to help it grow. Unlike saving, investing involves some risk, but it also offers the chance for higher returns. The key is to start early, diversify your investments, and think long-term. Investing helps your money work for you. Every investment comes with risk, the chance you could lose money, but higher risk often means the potential for higher reward. Understanding your own risk tolerance helps you choose investments that fit your goals and comfort level. Never invest money you can't afford to lose. Compound interest is when you earn interest not just on your original money, but also on the interest you've already earned. Over time, this can make your savings or investments grow much faster. The earlier you start, the more powerful compounding becomes, making it one of the most important concepts in personal finance. Taxes are a part of life, and understanding them is crucial. Income taxes, sales taxes, and property taxes all affect your finances. Knowing about deductions and credits can help you keep more of your money. It's important to plan for taxes and keep good records to avoid surprises. Insurance protects you from financial loss. Whether it's health, auto, or home insurance, paying a small amount now can save you from big expenses later. Understanding what coverage you need and how policies work is an important part of managing your money wisely. An emergency fund is money set aside for unexpected expenses like car repairs or medical bills. Having this cushion means you won't have to go into debt when life throws you a curveball. Experts recommend saving 3 to 6 months' worth of living expenses for peace of mind. Setting clear financial goals gives you direction and motivation. Whether it's buying a car, traveling, or retiring comfortably, goals help you plan and measure your progress. Break big goals into smaller steps and celebrate milestones along the way to stay motivated. One of the simplest ways to manage money is to separate needs from wants. Needs are essentials like food, housing, and utilities. Wants are extras like dining out or new gadgets. Focusing on needs first helps you avoid overspending and keeps your finances on track. Scams and fraud are everywhere, especially online. Protect your money by being cautious with personal information, using strong passwords, and verifying sources before sending money. If something sounds too good to be true, it probably is. Staying alert keeps your finances safe. Banks do more than just hold your money. They lend money to others, invest in businesses, and help the economy grow. By saving and borrowing through banks, you're part of a larger financial system that supports communities and creates opportunities. One of the best habits is to pay yourself first. Set aside savings before spending on anything else. This ensures you always make progress toward your goals no matter what. Automating savings makes it even easier to build wealth over time. Financial literacy means understanding how money works so you can make informed decisions. It's a lifelong skill that helps you avoid mistakes, spot opportunities, and build a secure future. The more you learn, the more confident you'll feel managing your money. Money isn't just numbers, it's emotional. Stress, fear, and excitement can all influence how you spend and save. Recognizing your feelings about money helps you make better choices and avoid decisions you might regret later. Giving to others, whether through charity, gifts, or helping friends, can be a rewarding part of your financial life. It's important to give within your means and make it part of your budget. Generosity not only helps others but can bring you a sense of purpose and satisfaction. Everyone makes money mistakes at some point. The key is to learn from them and adjust your habits. Whether it's overspending, missing a payment, or a bad investment, every mistake is a chance to grow and improve your financial skills. Understanding how money works is a journey, not a destination. The basics: earning, spending, saving, investing, and protecting your money are the foundation for a secure future. Keep learning, stay curious, and remember, you have the power to shape your financial story one decision at a time.